It's New Year's Eve, and what better time to take an in-depth look at the Korean economy and the global economy in 2021, and a look ahead at what might be coming in 2022. For that, it's our privilege to have in the studio today Dr. Sei-wan, Professor of Economics at Ewha Womans University. Professor, it's great to have you in person today.
Pleasure to be here.
Well, before we begin our discussion, it might be good to take a look back at some of the big stories in the economy in 2021. Despite the pandemic, the South Korean economy did quite well in some areas. There are also a lot of headwinds too, though. Suk-hyen has a year-end wrap-up for us.
In 2021, with the rollout of COVID-19 vaccines, the world's economies started to open again. For the most part, countries eased travel restrictions and resumed business activities. But the reopening of economies left one major challenge in its wake: global supply chain disruptions. While demand increased, pandemic-related disruptions continued to affect production, thereby leading to supply shortages. On the sidelines of the G20 summit this year, world leaders agreed to collectively address the crisis.
Ending the pandemic is the ultimate key to unlocking the disruptions we're all contending with. But we have to take action now, together with our partners in the private sector, to reduce the backlogs that we're facing.
The supply chain glitches have pushed up costs of key commodities, and consumers are feeling the pinch from higher prices.
Because grocery shopping is so expensive, I'm trying to buy items that are cheaper. Compared to last year, prices have risen so much.
I refuel my car once a week, and I feel it costs about 50,000 won more than last year.
Consumer prices in January rose by only 0.6% on year. Now, latest data shows that consumer prices in November surged 3.7%, marking the biggest on-year jump in almost a decade. Inflationary pressures are not only building up in South Korea, but also in other parts of the world. Last month, U.S. consumer prices jumped by a staggering 6.8% from a year earlier, the highest in 39 years. Across the Eurozone, annual inflation surged to a record 4.9% in November, fueled by soaring energy prices. Experts say the supply chain challenges and inflationary pressures could last longer, with the devastating blows from COVID-19 variants. Looking back, major economy indicators in South Korea have remained remarkably strong. South Korea's exports have risen for 13 months in a row, and in November, exports topped $60 billion for the first time. This year's trade volume also reached $1 trillion in just 299 days, the fastest ever. President Moon Jae-in touted the country's performance, saying this year will be recorded as the year of trade.
우리 경제사에서 2021년은 무역의 해로 기록될 것입니다. 우리는 한 계단 더 뛰어올라 세계 8위의 무역 강국으로 발돋움했습니다.
Not to mention, in January, South Korea's benchmark Kospi broke above 3,000 for the first time on the back of hopes for an economic recovery. Employment figures have also been rising since March, and so far they've been growing for 9 consecutive months. Going forward, the Finance Ministry expects South Korea's economy to grow 3.1% in 2022, following strong exports and a rebound in domestic demand. Private spending is projected to increase 3.8%, while exports are predicted to jump 2% to a record high of $656 billion. Suk-hyen, Arirang News.
It would seem that the Korean economy has done well in terms of growth, as Suk-hyen reported. So back to Professor Sei-wan, who we have here in the studio today. As she reported, this year trade surpassed $1 trillion. We have economic growth this year expected to come in at 4%. Korea is again the 10th biggest economy in the world. So looking back, what do you make of 2021?
It is expected that the size of Korean GDP amounts to $1.8 trillion as of 2021. It is actually larger than that of Russia and Brazil's, but slightly smaller than Italy and Canada's. So Korea keeps the location of 10th largest economy in the world over 3 straight years until this year. I would say this is a amazing achievement because Korea used to be one of the poorest countries in the whole world until 1960s. Also, Korean economy trades more with other countries because Korean economy does not have much natural resources. So in this respect, the size of trade became $1.25 trillion as of this year, and export size became $640 billion. It means that Korea is the 8th largest trading country in the whole world.
Right. So again, at the macro level, we can see that economic indicators are good, trade is strong, but for some people here in the local level, it doesn't quite feel real. We look at data saying that 1 in 4 small business owners has seen revenue go down. At the same time, their debt is going up. For people in the middle income range, they're finding it more expensive to buy a home. At the same time, the other prices have gone up too. So for ordinary people, what's the situation and what can be done to help them?
Well, I'm glad that you raised this point, Devin. Even though Korean economy is relatively doing well compared to other countries over the last 2 years pandemic, it is true that for ordinary people or middle-income people, the economic living is not getting better over the last 2 years. There are 2 major factors about this kind of relatively worsening of living conditions. The first is higher inflation, over 2% on annual basis. Particularly, the prices of agricultural prices are increasing over 20% on annual basis. At the same time, we have experiencing skyrocketing housing prices over the last 2 years. So that made people's living relatively worse off than that of the last year. So it is important to provide support to workers who are suffering from these high inflations and housing price increases. And also, we have quite a few self-employers, and they are the hardest hit by the pandemic because these people's businesses are related to service industry like karaoke and restaurants and so on. So we need to provide more support, like cash support to these self-employers.
Indeed, and here at the pandemic's second year, at the end of it, we see the Omicron variant emerging as a new factor that we have to take into account. Strict distancing rules, as we heard, have been extended for another 2 weeks until mid-January, and there are some new rules involved there as well. What can you tell us about that?
Korean government is implementing a stronger social distancing thanks to the rise of Omicron. Another COVID variants of Omicron spread. It is something policy that should be implemented and enforced to the people, but that really decreases the size of the service industry because that makes people to stay far away from each other. So as of now, Korean economy is staying in the track of 4% economic growth. But thanks to this stronger quarantine and social distancing implemented by government, there is a possibility that the last 3 months' economic growth is lower than expected. Then we can't achieve the target of the 4% economic growth for this year.
Right. If I recall, at the end of the year, it'd have to come to over 1% to reach that 4% target. Well, I guess we'll know here in the next few weeks what happened.
Exactly.
But if we could turn to the stock market for a minute, it's been a remarkable year. The Kospi right now is sitting at around 3,000 points. We've seen a record inflow of money into IPOs this year. Also, growth companies seeing their best ever performance in 2021. So what issues have driven the market this year?
Well, domestic stock market is continued this rising situation over the last 2 years. However, the stock market performance was not as good as last year for this year. For example, last year's Kospi return was about 35% between January and December. But for the same period between January and December, as of now, the Kospi stock return is less than 1%. So quite a few individual investors are feeling that this year's stock market is not performing well compared to that of the last year. But in retrospect, this is very natural result because this year, Bank of Korea raised the key interest rate twice. So that means Bank of Korea is providing less amount of liquidity or money to the economy. So, and in addition to that, Bank of Korea is very highly expected that to raise interest rate 1 or 2 times next year. All these higher interest rates are reflected in today's stock market. So stock markets is experiencing something adjustment period from the end of this year until next year.
Right, and you mentioned the remarkable performance from 2020, above 30% on the Kospi, and then this year quite the opposite. But maybe that is what's behind drawing so many people, new investors, into the market this year. In particular, they bought more than 9 trillion won of shares in the local market, $8 billion or so. Locally, they call them affectionately the Kemi, the ant investors. Right. What's behind this trend, and where do you see it going?
Well, that is a very important change of the Korean stock market. The popularity of ETF or equity trade fund is related to the stock indexes return, like Kospi's return is higher than or superior to actively managed mutual funds, which is run by professional and educated investors. This is something happened in the U.S. stock market a long time ago because ETF, equity trade fund, covers over 30% of the U.S. individual investors' total investment. So that kind of generalization or more popularity of the ETF will be continued for a longer time, and that's going to be something, the fundamental investment vehicle to general investors in Korean stock market.
That's certainly the way it's going. And Korean markets, of course, they're closed for the year now. In the U.S., though, we've still got one more trading day. It's on New Year's Eve there. And the futures are pointing to a lower close for the U.S. markets. But, just a couple of days ago, they reached new highs. So take us through the global markets this year.
Well, U.S. market ended lower on Thursday, as investors are watching to see if the upticks in COVID-19 and the new Omicron variant changes the situation of U.S. economy. So, and it is also expected that U.S. Federal Reserve is closing the tapering until the March of next year, which means that U.S. Federal Reserve is providing less amount of money to U.S. economy. And it is also expected that U.S. Federal Reserve is raising key interest rate about 3 times next year. So there are quite a few stocks that are suffering from higher interest rate, like technology stock and consumer discretionary stocks. So quite a few U.S. investors and global investors are about to selling or actually selling these interest rate sensitive stocks. So again, like that of the Korean stock market, it is expected that global stock market and U.S. stock market is experiencing adjustment period until next year.
Yeah, and on that note, the S&P we see was returning close to 30% this year, pretty remarkable. Doing quite well in other indices in the U.S. But next year, the thought is that these returns are not going to be that good. They could be quite a bit lower, and even going years into the future. What do you make of those projections? How do you see the markets going?
Well, next year's stock market, I think, total depends on the developments of the COVID variants like Omicron, because that is related to all major factors of the global economy, like inflation, global production chain disruptions, and so on. So, as we talked about, some additional factors are the central bank's interest rate hikes, which is determined by the length of high inflation over 2% in many different countries. So European Central Bank and U.S. Federal Reserve and Japanese central banks are all expected to raise key interest rate at least once next year. So if they are raising the key interest rate more than expected, there is a possibility that global financial market and U.S. financial market could be shrink more than expected.
And maybe we could zero in on inflation here for a minute. It's running hot around the world. Here in Korea, of course, there are many reasons for that. There's monetary reasons, there's supply chain reasons for it. Prices in Korea not rising as fast as they are in the U.S., though. But is this phenomenon, is this something we'll see continue into the new year?
Actually, only this year, until May of this year, U.S. Federal Reserve and U.S. government expected that this high inflation is something like a temporary situation.
Right.
Because as the global economy recovers, that global production chain disruptions will be wiped out sooner or later. But that turned out not correct expectation because high inflation is continuing until now. And they actually changed their expectation that this high inflation could be extended to the second half of next year. Actually, as of November, U.S. inflation increased up to 6.8% on year, and European inflation also increased up to almost 5%. But our inflation is much lower than that of these two major economic regions, with only 3.7% on-year inflation in November. So if we generally forecast the path of the inflation for next year, we can say that high inflation could be continued at least the first half of next year.
Well, looming behind all of this, of course, is the Federal Reserve, as you've said, and it's going to finish up tapering here this coming March, where it's going to stop the purchases of assets that it's been doing to prop up the American economy, which has in turn, of course, raised asset prices in general. We've seen the Bank of Korea, as you said, raise rates twice already, and both of them are expected to raise rates in the new year. What's going on at the central banks?
Well, the market's general expectation between U.S. and Korea is U.S. Federal Reserve would increase the interest rate by 0.25% 3 times in next year. And in Korea, Bank of Korea will be raising the key interest rate at least twice in the next year. That means U.S. key interest rate becomes almost 1%, and Korean key interest rate will be about 1.5% in the middle of next year. But actually, the timing of central banks' interest rate hike is related to the changes of inflation, which is also related to global production chain disruptions and energy prices like oil price changes. But we can say that central banks will be a fighter against the inflation rather than the recovery of the employment and the income.
That would be an interesting shift if and when we do see that. Now, we see the United States and China continuing their battle for supremacy in terms of technology, and some say that as that goes on, Korea could benefit. Of course, you know,
right.
They're one of the world's biggest makers of semiconductors and so on. How do you see this playing out, and what are the key factors here?
Well, according to poli-sci professors in the world, the competition for global hegemony between U.S. and China would be a never-ending game in a century. So right. That means there will be very strict ban on Chinese high-tech imports from Western countries, like from Korea or Japan and European countries. So there will be very difficult situation for Beijing to develop memory chip industry and other chip industries, which is initiated by Chinese government. So as of now, Chinese imports of the memory chip doubles the imports of the crude oil in China. So
amazing.
The memory chip is #1 import item for China. That's why China wants to develop their own independent and most advanced chip technology. But that was not successful yet, even though they have initiated that plan in 2018. One thing Beijing misunderstood was money is not everything in developing memory chip industry. Developing people, well-educated people, is much more important than that of pouring money into that specific industry. So along with U.S. government, Biden government's very strict restrictions on Chinese high-tech industry, Korean memory chip industry will thriving for next 10 more years, I think.
It's a really great point. Korea has the talent in the industry, and they have a strong ally in the United States and
exactly.
a great market. And interesting timing about 2018, we saw a lot of moves begin on the technology front.
Exactly.
Those two. Well, finally, Professor, I want to ask you about another hot topic, which is housing. And we sort of saw the city of Seoul put a stop to some of its redevelopment projects back in the middle of the last decade, but now it seems those are going to start again. The goal is to put more housing units on the market and try to cool down this overheated market, get homes to those who need them. What do you see happening with the housing market?
Well, as we talked about, one of the largest economic pain to general people in Korea is skyrocketing housing prices. The housing price increased over 15% on year, according to KB Bank's recently released data, which is the highest level in 2 decades. So this unstable housing market is one of the largest concerns to the future of the Korean economy. But one thing we know very clear is that without providing more apartments and houses to the market, it is almost impossible to stabilize the domestic market. So new policies of the government on related housing market should be combined with providing more houses and along with the redevelopment of the old apartments.
Supply seems to be the name of the game. Professor, we'll have to leave it there. We really appreciate you coming on every week here at Arirang News. It's been a great help to us in 2021, so we thank you for that, and we'll see you in 2022.
Thank you very much.
Happy New Year.